Hey there, NIO Bulls. Hope you're all doing great and maybe even charging up those EV dreams. Because today we've got some big news straight from Wall Street. Goldman Sachs has just raised its price target for NIO, and the reasoning behind it might give us a little insight into where this stock could be heading next. So let's dive right in. Goldman Sachs analyst Tina Howe and her team have updated their outlook on NIO, raising the company's 2026 to 2030 sales forecast by between 6 and 11%. Why? They believe NIO's latest models like the Onvo L90 and the NIO ES8 have seriously boosted the company's competitiveness and driven strong sales growth in recent months. Now here's where things get interesting. Goldman's note points out that NIO plans to keep this momentum going with a packed lineup into 2026. The company is preparing to launch 2 new models. These upcoming models are expected to follow in the footsteps of the L90 and ES8 by enhancing NIO's product competitiveness and keeping that sales growth alive. As a result, Goldman Sachs raised its price target for NIO to $7 per share, or 55 Hong Kong dollars, up from the previous target of $4.30, or 33 Hong Kong dollars. That's a pretty big jump. NIO's Hong Kong listed shares climbed more than 4% on Monday, closing at 56.9 Hong Kong dollars, as investors cheered some very strong October delivery numbers. The company delivered 40,397 vehicles last month, breaking the 40,000 mark for the first time ever and setting a record for the 3rd month in a row. That's up a massive 92.5% from October last year and up more than 16% from September. All 3 of NIO's brands saw delivery growth, with the biggest boost coming from its mass-market sub-brand Onvo. This brand is quickly becoming a key growth engine for the company. Looking ahead, Goldman Sachs is now expecting NIO to break even in 2028, a year earlier than they previously predicted. Even more interesting, NIO itself is aiming to achieve its first quarterly profit by the end of this year. Goldman attributes NIO's recent momentum to aggressive pricing strategies on models like the Onvo L90, and they expect similar tactics for the upcoming models. So, to sum it all up, Goldman Sachs is becoming more confident in NIO's long-term strategy, especially its growing lineup and strong recent deliveries. We've got improving fundamentals, record-breaking sales, and an increasingly competitive product lineup. On the other, the market and major analysts are still waiting for NIO to turn those numbers into consistent profits. What do you think? Is Goldman Sachs being too cautious here, or are they right to play it safe until NIO proves it can sustain profitability? Let me know your thoughts down in the comments, and then don't forget to like and subscribe for more NIO stock updates and EV news. Until next time, stay charged up, and I'll catch you in the next one.